Hi, I'm Daniel LeBeau, and welcome to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today we'll be talking about the ride-sharing battle. And Uber and Lyft have been battling out in the streets of every major city and now duking it out in the financial markets. These stocks have traded down since their IPOs in the first half of 2019 as the public markets price out venture capitalists' seemingly overzealous valuations. But as you can see, Uber and Lyft have finally appeared to bottom out and are beginning to rally in 2019. So we're going to talk about the Q4 earnings, which just hit the market at the beginning of this week and the end of last week for this duopoly. So before I dive into what happened during this earnings, I'd like to explain that investor sentiment for these two companies is primarily driven by the timelines to profitability. So think about that as I explain what happened this earnings season. So Uber rounded out the year and essentially met expectations with its earnings release on February 6th of last week. But Uber Eats did produce some significant losses, which concerned some investors like me specifically. They produced a loss that was actually larger than what they brought in revenues. But in the earnings call, they explained this is still a developing segment, and that the segment is actually profitable in some regions. So it's going to take some time for that profitability to roll over to the developing locations where they are currently implementing this segment. So the big news that came out of Uber's earnings was the shorter timeline to profitability, which Uber's CEO promised in the earnings call. And it was a positive EBITDA by the end of this year instead of its original goal of 2021. This was huge news for the market, and this rallied Uber stock over 11% since its earnings last week. Now, there was a very different tale told by Lyft. So Lyft actually blew out its Q4 estimates, but unfortunately, the stock dropped 10% after its Tuesday, February 11th earnings. And this was perplexing to a lot of investors, considering that they beat pretty much every metric in the book and brought in over $1 billion in quarterly revenue, which was a record for them, as well as marginally raised guidance. But this just wasn't enough. Lyft investors were riding the high of Uber's profitability growth story. It was boasting in the Q4 earnings call, and they expected Lyft to follow suit. And were very disappointed when Lyft did not, and they kept the same timeline. And this dropped Lyft's stock quite a bit. But Lyft has been much more conservative with its guidance than Uber over the last 3 quarters, with huge beats on both EPS and revenue guidance. So it looks like Lyft's conservatism has caused its recent price breakdown, while Uber's optimism is extending its rally. I think these firms will hit profitability at similar timeframes considering how they've performed in the past, and this drop in Lyft's stock after this earnings may be a buying opportunity for this company. So both companies are now knowing that they are under the gun, and they are taking significant measures to cut costs and hit profitability as soon as possible. Ride-sharing's race to the end of their capital may no longer be an essential issue for these companies. It is now a race to profitability. The companies appear to be putting their bets, the markets appear to be putting their bets on the larger of these ride-sharing duopolies, Uber, with their diverse portfolio, broader operations, and more capital to burn. But Lyft, a nearly pure-play strategy, could end up being its competitive advantage, with Uber's other segments, specifically Uber Eats, are producing substantial losses which have been weighing on their profitability. So both these companies, I think, are investable assets, and they are at a low right now. Their valuations are below 4 P to S, and I think that this recent rally might be continued for these ride-sharing stocks. Once these stocks do hit profitability, I think they're going to run. Like I said, the real concern that investors have is their lack of profitability, and once that's hit, these stocks have nowhere but up to go. So thank you for watching The Fourth Revolution, and I look forward to speaking to you guys next time.